Welcome back, and joining us on the show now is Paul Bartholomew. He's Senior Analyst and Metals at S&P Global Platts. Paul, hi, thank you so much for joining us. And what a month of September we've seen when it comes to metal prices, ferrous and non-ferrous both, and especially with China throwing up so many stimulus measures. The sentiment clearly has been taken in. Much of the price is already factored in. Going forward from here, when do you start to see all of these stimulus measures actually start to support demand, actually start to show up in the economy and demand pick up?
Yeah, hi, Manisha. Well, I think obviously we saw the stimulus measures last week aimed at trying to shore up the property sector, which we think is still under a lot of pressure in China, and is very much hanging over steel prices, but not just steel, but aluminium and other prices related to copper. So I think we saw a bit of a reaction for some of the prices, particularly the ones that are very driven by futures. But then again, we saw I think the physical prices kind of really reacting back or going closer to fundamentals in the subsequent days. So I think there's still some very strong sort of structural challenges around sort of China property. So I think, we're not S&P, I think, as a company is not really expecting huge stimulus measures like we saw during the financial crisis, for example. But I think that I think it's going to be very hard to kind of move the dial on some of these metal prices, particularly things like steel that I look closely at because of the property sector.
Paul, are you still expecting that China would come up with something more in sense of measures when it comes to property as a sector?
Possibly. I think, the people that we talk to in the market are expecting something else this year. I think that obviously that tomorrow's the China holiday, the Golden Week holidays. They're all going off for a week. And I think some of the sort of chatter that we've been hearing in the market suggests that there could be more stimulus measure. But I think also there's a bit of a sense of quite a sort of sanguine kind of approach to what we're sort of seeing in the market, because it hasn't. Some of the measures that we've seen this year, some of the government meetings, the plenary meeting, etc., they didn't really kind of move the dial all that much on prices, at least not for very long. I think as I say, the market has got some very big fundamental challenges, and I think they quickly revert to those once some of the noise around the futures dissipates.
Paul, when I look at the previous week, and that is when we saw most of the China stimulus measures come in, almost everything is on the positive side. Copper is up 7% up, aluminum up 6%, zinc is up 8%, iron ore prices gained up by 11% in the previous week. The only thing that did not move so much was the steel prices. So going forward from here, if somebody had to invest on the long side for metals, what would you recommend?
Yeah, well, I mean, because we're not sort of equity analysts as such, but I think, look, we look at sort of nickel, aluminium, copper. I think when you look at them, the prices are kind of, I think, determine a little bit what we're seeing in macroeconomic factors. Obviously, we've had that US rate cut now as well, and also fundamentals, what's going on supply and what's happening with the LME. For example, I mean, I think we're possibly seeing perhaps a bit more sort of upside sort of going into next year. But I think a lot of the sort of macro external factors have proven to be very, very kind of stubborn. Trying to shift that high inflation. We thought that would probably improve by now this year, but now probably looking into next year before we see a bit of an improvement. And I think, yes, we have seen some price sort of jumps, but I think once the market comes back from that October Golden Week holiday, it'd be quite interesting to see whether it comes back in a sort of bearish mode or whether there's a bit of upside. I think perhaps going in towards the end of the year and looking ahead to Chinese New Year next year, when we might get a bit of restocking, which should support coking coal, iron ore prices, for example.
Paul, as we get into the final quarter of this calendar year, what is it that you would be watching out for? Is it going to be China yet again for stimulus measures, or is it going to be Fed rate cuts, including other global central banks as well, the US presidential elections as well? Well, that comes in the month of November. So what is it that you are keeping your eye on? What moves the needle?
Yeah, well, I mean, with the US presidential election, it's, obviously there's a change, and there's talk a lot about tariffs around Chinese manufactured goods that could have a big impact on metals prices. I mean, China's already kind of struggling a little bit. I noticed that the manufacturing PMI data was down again today, the S&P one. Again, I think some of the external sort of challenges, it's harder to, export Chinese manufactured goods. Obviously, it's been exporting a lot of steel around the world. So I think we're definitely looking at the US presidential election, and also to see whether some of those there are more rate cuts, whether that starts to flow through to business investment, consumer spending, to start trying to sort of pick up, I think, some of those, manufacturing goods again. Because so far it hasn't really happened. It's really all been about supply rather than demand, particularly on the ferrous side. So I think, going into next year, we'd like to see kind of auto coming back a bit, manufacturing being supported, which could help support, some of these prices. But then again, I think the property sector in China, which is, very important, it does have some structural weakness. And I think that's, going to be trending down even more probably next year.
Paul, when it comes to steel, really, and as I said, that is the one that's really underperforming the overall sector right now. What is your sense on what demand, what kind of global production numbers, Asia demand for that matter? How are you calculating all of that?
Well, I think one of the things we're seeing a lot at the moment is these very high level of Chinese steel exports. We're expecting a return to 100 million metric tons this year, which is the first time really since 2015, which was probably the real nadir for the global steel sector. So, for example, you're seeing China exporting quite a lot into India, which is having a knock-on effect on Indian steelmakers, and also you're seeing India or countries like Vietnam exporting a lot into places like Europe. So I think it's all having a kind of knock-on domino impact really of these high finished steel exports from China. So I think that's putting a lot of downwards pressure globally. Allied with what I mentioned earlier, there's that lack of kind of recovery in some of those demand sectors as well. So I still think quite a bit of downwards pressure, I think, on steel prices, and until there's more of a maybe meaningful production cuts in China. Not just China, Europe's producing a lot of steel as well, but especially China. I think it's going to put a lot of pressure on global prices, and that could put a bit of pressure on prices and companies going into next year.
Paul, also, as you mentioned India, what's your sense on the Indian demand going forward? Within Asia, India really seems to be shining slightly brighter than what China seems to be doing. So with all that steel imports that we're looking at and various other metals as well, how do you look at India production itself and then Indian demand growth?
Yeah, well, I mean, looking sort of a bit further out, we've got huge demand growth, steel capacity growth in India. It's the real kind of, I guess, in terms of new capacity and production, it's the real bright spot in the world. Southeast Asia to a lesser extent. But of course, I think, the most important thing is that the domestic economy, the Indian economy really is strong enough to absorb, all those new tons of steel coming into the market. I mean, at the moment, we've seen a bit of India's been quite slow to restock things like coking coal. I think after monsoon, we're still waiting for a bit of a sort of pickup there. But of course, if India's got a bit of Chinese steel coming into the market, it makes it a bit harder, I guess, to keep steel production at high levels. But certainly, we do see India. You look at the demographics. It's probably one of the few countries where the manufacturing sector has been performing pretty well. And I think, once you start seeing a bit more of that infrastructure and some of those other projects really starting to gain some traction, there's a lot of upside, of course, for India, which I don't think we can really say. I think China has pretty much kind of worked its way through the gears a bit at the moment, and I think it's more a case of just stability really, rather than the kind of growth that we've seen in years gone by in China. But yes, certainly a lot of upside in India.
Fair point that, Paul. Thank you as always for joining us. So, well, in metals, when it comes to iron ore, copper, aluminum, all of them have been trading on the higher side. And as Paul tells us, that India is a shining star within Asian markets, where we have seen the demand growth continue quite on the stronger side. But with that, it's time for a short break. We come back with more.